participants are in listen-only mode.
Good afternoon. My name is George Newberry. I'm the founder and CEO of American Homeowner Preservation. We're going to wait just another couple of minutes, or actually just a few seconds to see. I think there's a couple people logging in right now. Okay, I think that's everybody. So again, good afternoon. My name is George Newberry. I'm the founder and CEO of American Homeowner Preservation, and we appreciate you attending. This is our first ever webinar. We recently launched a new site, which is at ahpinvest.com, which is offering our first crowdfunded pool, which is the 2013C pool, and we'll be getting to all that in a few moments. Right now, I'm going to go down memory lane just a bit, though, and give you a brief history of AHP. We have our history. We started out in 2008. We were originally a 501c3 nonprofit. We were located in Cincinnati, Ohio, and our mission was to keep families in their homes. This was right at the beginning of the foreclosure crisis, and we had thousands of families that came to us for assistance. We would then work with those homeowners' banks on a one-by-one basis. We would go to the banks, try to make deals to keep the families in their homes. But the challenge was that banks frequently denied those resolutions, even though they created affordable solutions for homeowners and they yielded better financial outcomes for the banks. They still denied them. And as a result, only 10% of the homeowners that we worked with actually received assistance. By 2010, we had transitioned to a for-profit, and we finally decided that the only way that this was going to work was to take the banks and the servicers out of the equation. And the way to do that was to purchase the delinquent loans from the banks, and then we would own the loans, and we'd be able to make the decisions. And so we went to a handful of banks, and eventually a hedge fund, which is 5 Mile Capital, and a bank, which is Banco Popular, both agreed to sell us loans. And so we bought our first loans, and give you an example, a homeowner owes $100,000. That home value has now dropped to $50,000. We're able to buy that loan for typically $25,000. So by buying at such a discount, we now had great flexibility to offer transformative solutions to those families. If the family wants to stay, we can modify the payment to reduce it, make it affordable for the family. We can also reduce the principal or give them discounted settlement options. If they don't want to stay, we can offer them a cash incentive, maybe $1,000, maybe $2,000, in order to incentivize them to cooperate with either a deed in lieu, foreclosure, or a short sale. And what that will do is oftentimes take a vacant home, one that's a blight on our community. We're able to get the deed, list it with a local agent, and sell the home to a new home buyer or an investor. And that home now becomes occupied again and now is no longer a blight on that community. So whether the family stays or we take a vacant home and put it back into service, both of those serve our social mission and can serve a financial and generate financial rewards as well. This worked out very well. We had strong returns for our investors, and by late 2011, we transitioned to a hedge fund structure, and we purchased over $40 million in mortgages. In 2012, the first full year of operating as a hedge fund, we generated over 20% return, which netted investors over 14%. Today, less than 60 days ago, the Securities and Exchange Commission changed the law, and they enacted new legislation that actually permits hedge funds, private companies, and others to advertise for investors. This was prohibited for years, and that all changed September 23rd. As a result, in late October, AHP launched our distressed mortgage crowdfunding site, Again, it's ahpinvest.com. And we were able to change the model a bit. And what we do now is if an investor puts in their investment for a year, they can earn a 9% return, 2 years, a 10.2% return, and 5 years, a 12% return. $10,000 minimum investment, and the returns are distributed monthly. So this has become what we believe to be a much more accessible and easy to understand investment for most investors, and we've had some great positive feedback from many investors as a result of this. One caveat is that the SEC has changed the law, but they require that these types of investments are only sold or only participated in by accredited investors. Now, accredited investors either have a net worth of $1 million or more, or an annual income of $200,000 for an individual or $300,000 for a couple. Also, if you're an investment fund or other types of investment companies, lots of times you can also be considered accredited and can participate. Now, our first offering on the crowdfunded site is 2013C, which is a pool of 249 assets, of which 90% are first mortgages and 10% are REOs. The total due on these mortgages is over $26 million. The total estimated value of the real estate collateral is over $14 million, and the total investment, $5.6 million. The investment as a percentage of value, 38%. Investor Protection Protocol. When we were a hedge fund, we weren't able to, as I mentioned earlier, we were not able to advertise. We could basically go to existing contacts, people that, friends, family, business associates, people we had done business with before. Those were the people that we could work with. And so many times they had built up a relationship with us, they had some trust. But now that we're advertising to the general public, people will come across our website, maybe read about us in a news story, see an advertisement, hear about us on the radio, or however they reach us. But either way, they get to the website and they're saying, hey, this looks pretty interesting. I can earn a good return, and I can, at the same time, help achieve a social mission, keep families in their homes. But when you see a return of 9% or even 12%, some people say, well, that's 10 times what my local bank is paying on a CD. Is this too good to be true? Is there a catch? Is this a scam? What could go wrong? And so what we've done is, in order to make investors who we do not have pre-existing relationships with, to make them comfortable, we've tried to enact our Investor Protection Protocol, which has 3 facets. One is protection of cash. Investor dollars don't come to AHP. They go to a Bank of America account, which is controlled by a third party, which is GNS Fund Services. GNS Fund Services is a hedge fund administrator, and they handle the administration for over 75 funds. And basically, investors will wire their money into this account or deposit or do ACH, invest online, however it gets to the account, it arrives there. Now, to make any withdrawal from that account, any distribution, requires GNS's approval. So GNS, if we want to buy a mortgage pool, we need to send them a copy of the contract, send them the backup, and say, hey, we need you to wire $5.4 million, and they will, based on the backup documentation, can approve the wire. Likewise, if we have 100 investors and that we're distributing income to on a certain month, we provide all the information that, $100 goes to this investor, $1,000 goes to that investor, whatever the numbers are. We present that to them. We present them the backup for that. And then they approve the distributions, which are typically sent by ACH directly to the investor's bank account. Likewise, for expenses, management fees, legal fees, whatever expenses or any withdrawals or distributions from this account have to be approved by GNS Fund Services. Additionally, when a homeowner makes a payment, let's say they modify their loan, they start making payments, that money doesn't go to AHP, rather it'll go to a third-party servicer, which is FCI Lender Services. FCI will receive those monies, provide statements to the borrower, be available for customer service for the borrowers, but a large part of their function is to collect this money and then forward it to the same Bank of America account under the control of GNS Fund Services. A couple of other facets: protection of assets. Here we're buying 249 loans in this example. Those are held in a trust. They're held in American Homeowner Preservation Trust. The trustee is U.S. Bank. Likewise for the documents, when we buy these loans, they're often evidenced by documents such as a promissory note, a mortgage, modification, whatever documents are in the file. Those are the assets of the fund, or the documents that back up the assets in the fund, and those are held, once again, by a third party, in this case, Orion Financial Services. All the documents are shipped there. Orion audits them, and then they store them in a fireproof environment. And so between these three facets, protecting the cash, protecting the assets, and protecting the documents, all in the hands of third parties, we're hoping that gives a great deal of comfort to new investors who are introduced to AHP and are considering making an investment. Distribution of income. The income is distributed monthly. The first thing that is distributed is the preferred returns to each class, which is the 9%, 10.2%, or 12%. To the extent there's excess revenue, extra cash after paying those preferred returns, that money is distributed to the shortest term next class. So that would be initially Class A. Class A is for 1 year term, so all the excess revenue will be paid to the Class A investors until Class A is completely paid off, which in many cases we expect will be shorter than a year. We expect within a month or two that Class A investors, in addition to their return, will start getting some of their capital back, and then over the course of the next remaining months, remaining 9-10 months, they'll continue to get that incrementally and be paid off by the end of the year. Once Class A investors are paid off, we move to Class B, and the preferred returns are paid at that point to the Class B and the Class C investors, and then the extra revenue distributed to Class B until Class B is fully paid off, and then the process is repeated. The preferred returns go to Class C, excess revenue goes to Class C as well until they're paid off. When all the investors have received all their money back and all their preferred returns, whatever left, whatever residual value is in that pool goes to American Homeowner Preservation. That's our incentive. That's what we earn. But again, it's important to note that our incentive is backloaded. We don't earn an incentive until the investors have all received their money back plus the preferred returns. Contact us. You can learn more at hpinvest.com. Call anytime, 800-555-1055. You can reach me directly, or any one of our staff can help you. What I want to do now is go to the website, and let's navigate over there quickly. Okay, this is our website. We hope you enjoy it. We're constantly trying to improve things. If you ever notice anything that needs a little bit of work or isn't intuitive or working just how it should be, please let us know. This is a work in progress, but we're pretty happy with the progress so far. I'm going to create a login, which many of you have done, but if you haven't, we encourage you to do so. It allows you to see some other portions of our site which otherwise are not available until you've created your login. Okay, so now I've just put in my name, email address, phone number, and a password. That's step one. And actually, let me do one more thing here. I've actually used that dummy email before, so I'm doing that another one. Okay, so here we go. Step 2 is to verify that you're an accredited investor. Again, the parameters: net worth of over $1 million, or income, if you're single, of over $200,000 a year, or couple, over $300,000. Alternately, you're a bank or you're representative of a bank, insurance company, or other types of entities. You can check any of those boxes, and here I've checked simply the top one. And then we need to verify that. As a result of the SEC's new regulations, which allow us to advertise, we also are required to verify that an investor is accredited. And we can do that in many ways. And they're simply asking us to be reasonable in verifying. So we can use a bank or security statement that shows that you have more than $1 million. Alternately, a letter from a professional, such as a registered broker-dealer, investment advisor, licensed attorney, certified public accountant, or certified financial planner. They can write a letter saying they're familiar with your affairs, they've examined your tax returns, familiar with your holdings, whatever the situation may be, and state that based on the information they have available, you are an accredited investor. That's sufficient. And in fact, you can, if you like, request it directly from the site. You can click on Request from Third Party. You can put in the CPA's name, and you can put in their email address, and then they will receive an email which contains a link to a template letter that they can complete, and also an invoice, because we will reimburse them for up to $100 for their time in verifying that you are an accredited investor. So whichever choice you choose, we try to be as flexible as possible, but we do need to maintain compliance with the SEC's guidelines. If you don't have your information available right now, you can simply contact us to review if you want to have a callback because you have any questions, or you can upload later. And once you submit, your profile is created, and you can now click on anywhere you like, but you might want to click on View Opportunities, which will take us to, once again, the 2013C pool. As you can see, we've raised $1.4 million. We have about another 2.3 that we have investors working with some investors on there. A couple of institutional investors are talking about putting some large sums, and then we still have some money to raise. So there's still definitely room to participate, and we hope that you do. Click on View Details, though, right here, and you will see on the first screen an overview, give you a little bit of background on the pool itself. It'll highlight this is a nationwide pool. The assets are located in over 30 states. To give you a little bit of color on the landscape, the most highest value asset is a home in Southern California in Azusa, a nice suburb of Los Angeles. The value is over $600,000, and that is a very nice asset. However, recognize that the majority of our assets are homes that have values of $100,000 or less. In fact, I think 85% of the assets have values of $100,000 or less. And these are typically found in low to moderate income neighborhoods, working class families who are many times struggling and were hit hard by the housing crisis and are still struggling. And you can browse through the photos here. You can, I think the vast majority of the assets here are photos, and you can in fact hover a little bit and see a little bit of information on each of the homes. Again, some are vacant, some are occupied. It runs the gamut. Down here, documents. All the documents pertinent to the transaction are right here. You can see the private placement memorandum, the other documents, and the trust agreement. If you have a question, you can always call us, but there's also an Ask AHP button right down here where you can ask a question. Click, and we will promptly answer it. Assets. Here you can see all the assets that are in the pool. Just using the top one as an example, this is a property in Alabama, single-family residence. It's occupied. You can click on the BPO report. The majority of these do have BPO reports, and you will see the actual report, and you can read this is typically done by a local realtor. You can read their comments and calculations. Here they're saying they think the property's worth $15,000. They also provide some photos. Many a time we clip their, the primary photo, but lots of times we give you some other, here are the view from the street, some of the other photos that are of the subject and of the nearby homes. I should say comparable homes. You can also go over here and you can see estimated value, estimated payoff. I mean, you look at these numbers. They owe more than $100,000. The house is currently worth $15,000. I mean, their payment at $100,000 is probably close to $1,000 a month. Payment here is probably going to be, once we get it, we'll probably offer them $250 a month. That's going to be a 75% reduction in their payment if they want to stay. If they don't want to stay, again, we'll sell it. We're buying this for $3,750. If we were to sell it, get a deed in lieu and pay them $500 or $1,000 for the deed in lieu, sell it for $15,000. Even if it comes in, we end up selling it for netting $10,000 from the sale because we sell it for $12,000. There's still $6,000 to be made. Not big on one asset, but you go that times 249, it starts to become significant. Our discounted settlement, as an example, if the homeowner wants to simply settle a loan, they can settle their $100,000 loan for $13,500. It's a savings of 87%. Here, the ownership type, we own the first mortgage. On some of these, it's an REO. Again, it's about 90% first mortgages, 10% REOs. You can, if you want to see what holdings we have in a particular state, you can choose, for instance, California. There's 2 assets in that state. They both look like nice properties. Here's, in fact, that property in Azusa, California that I mentioned earlier. Value of $618. They owe $561. We're buying it for $609. Nice home, as you can see. It's currently occupied single family. Financials. Here you go. Again, we've seen some of these figures before. $26 million is due on these mortgages. The real estate collateral is worth $14. Total investment $5.6. In fact, out of the $5.6, $5.4 is being paid to acquire the assets, plus there's a reserve account of $173,000. The way we've structured it, we set aside this $173,000 at the outset. In the event, the early months or some month in the middle, there's a shortfall because it will be lumpy. Some of these families will be making payments, and that's income that will be relatively regular. But when we're selling homes, those can come a little bit less consistently, and so some months can have a great deal of revenue, and other months might be lighter. If there's ever a month in which there's not enough money generated to pay the investors, we'll draw on this reserve, and that reserve will then make sure that there's a steady flow of income to the investors, and to the extent the next month or some subsequent month there's excess funds, then the reserve is replenished. Our goal is to make sure that investors are always receiving what they expected. Investment is a percentage of value, 38%. Investment is a percentage of total value, 21%. So then you're looking at 5.6 into 26, 21%. I mean, who would have figured that when most of these loans were originated in the mid-2000s, let's say 2005, 2006, 2007, it would be hard to imagine at the time that several years later that all these loans are being sold for less than 0.25% of what of what's due on them. Another couple of figures: if all these payments were to be made, all these loans were to modify and payments were to be made, it would be $500,000 in annual payments. If they were all to be liquidated after paying costs and returning capital, we'd expect that $4.6 million would be generated from liquidation. However, recognize that it's going to be a mix. Some families will modify, some families will do deeds in lieu or short sales, so we'll probably be getting income from both types of solutions. Asset financial detail. Here you go. Again, we have, let me see, let it open. Okay, here you have a summary, annual projections. Some other detail shows our expected revenue per year, shows how investors are repaid both in their returns and their capital return. Here we're actually estimating that everyone would be repaid sometime in year 4. If you scroll down a little bit, you can see you can have The number detail on all these assets, you can see if they're vacant or occupied, what type of property it is, when they're due for. I mean, some of these families haven't paid since 2010, 2009, 2008. Many times they haven't paid in those many years, but note, we've had many experiences where families have been trying to modify, trying to do a short sale and whatnot, and the banks just simply won't approve it. So here we come in, we're ready to make a deal, and the deal helps the homeowner, but also generates a good financial return for our investors. Again, there's more detail here. This is how much is due on the loan. Value is what we estimate the property worth, typically as a result of a recent BPO. What we're paying, but we're able to get credit for delinquent taxes. So the actual amount of our acquisition is right here. It shows the acquisition as a percentage of value and as a percentage of the estimated payoff. If we were to liquidate, you can see our estimated liquidation gain and the percentage. If we were to modify, typically this is only done for the occupied payments. We show a forecasted mod payment and the mod annual return. Okay, let's go back to this screen. So now you said, okay, well this seems reasonable. Let me try it. Here's what you do. You can invest now. Choose 9, 10, 12. So we'll choose 10.2. That's for 2 years. Then you go on here, and it should be pre-clicked with the percentage and the period or term that you selected for investment. But there's no stopping you. You can change it, or you can invest in all 3 classes, a different amount or the same amount, however you want to do it. But let's just stick right now with 10.2. And let's say this is your first time with us, and you're thinking, well, I kind of want to try, but I'm just going to put in $10,000 just to see how this all works out. So $10,000 is your investment, which we appreciate. And let's say you're doing it individual ownership. Whichever type of ownership you select, and note that we can do self-directed IRAs as well as 401ks and other types of plans, trusts, corporations, partnerships, limited liability companies, whatever your form of investment, you click it here. And once you make your selection, you'll note that the information that we need from you changes according to the type of ownership. So let's say that you are a limited liability company. Here's a question: does the entity include any retirement plan assets? Why would we want to know? Well, we don't really care, except that the SEC and the government does, basically. If we have more than 25% of our investments are held by pension or retirement type of assets, there's additional guidelines that are on us. So we try to keep it under 25% so we don't have to do these additional reporting and have these additional restrictions that are imposed. So the answer can be yes, and if it is yes, that's great. But we'll just have to monitor and make sure that we do not go over 25%. So in this case, we'll simply say no. And are you a U.S. citizen? And this, again, is whether a company or an LLC, whatever the situation. In this case, we are. And we'll go ahead and use Illinois, because that's where I am. It can be any state. Preferred means of communication, you can check mail and put in your mailing address. But most people at this point prefer to use email. And it's pre-populated with my email address. And let's just say this is ABC LLC, and my name is George Newberry once again. And for fun, we'll say that I am the managing member. And the phone number, let's just use the 00000000000. The EIN number, 999-999-999. The mailing address is to be 1 Main Street, and that will be any town, but we'll still stay in Illinois. The zip code will be quintuple 0. How would you like to receive your monthly payments? Now, we've set this up so you can receive direct deposit. So each month, you're simply getting a direct deposit from into your bank account. And that probably is the easiest way. And to do that, you'd enter your bank account information down here. But if you say, I prefer to get a paper check, you can click on check. It'll ask you where you want it mailed to. If it's the same as above, you click that. It'll enter it. If it's not, then you enter the address. If you want to go direct deposit, then go back to direct deposit. You can say, hey, well, this is an LLC, so I'm going to put it in my business account. It's a checking account, and the routing number is typically a 9-digit number. And the account number can vary, but let's say use 12 digits, is probably too many in most cases. Fifth Third Bank is who we bank with, but enter your bank of choice. Company name, again, ABC LLC. And the address, in this case, is same as above. Try and save you a little bit of time there. And you will then go to the next step. So right now there's 3 steps. One is this information gathering page. The next is to sign the documents. And the final step is to fund the investment. So right now we are going to our next step. And I had forgotten to answer one question. Do I want to authorize any other person to give and receive instructions? In this case, I don't, but let's say someone did. They click yes. You can input their name, and then we can communicate with, for instance, your financial planner, financial advisor, uncle, aunt, whoever you designate. We can, whoever you so designate, we can communicate with them. But for now, we're going to use no. Click on next step. All the information you created on this page is now being utilized to generate documents. So now you go to the documents, and you will note that the information you entered is now pre-populated into this document. So the pool is 2013C, and most of this is pre-printed. This is one of the documents on that document page. You can go back and read it. It's probably easier to read it there than here. But either way, you can read it here all the way through if you like. And once you get towards the bottom, it shows that you've made a $10,000 investment, 2013C. Shows the address for our records. It also shows that you are a U.S. citizen. Your Social Security number or taxpayer identification number is here, state of residence, voice phone number, and your email address. The bank name, the bank routing number, the account name and the account number, and the fact that it's a limited liability company. Today's date is inputted here. You're a limited liability company, so you get to sign here. So you click there, adopt and sign, and momentarily you can click, and you have now signed your document. So you're on to the final step, which is to fund, which can be done by investing online. Here, it pre-populates with the bank account information that you utilized when you inputted the direct deposit information, so it's all here. So if you want to just simply take the money, the $10,000 out of the same account, you click submit. It'll come out within 24 to 48 hours and be transferred to our account. If you prefer to use a wire, you can click here. Also, if you're using a self-directed IRA, oftentimes they will wire the funds, so here are the wiring instructions. Or if you want to invest by check, likewise you can invest by check. Once you click submit, the investment is complete. Thank you for investing. Now once you complete the investment, the money will come in. We will make sure that we have your verification of accreditation, that's been verified. We'll check all the documents. If everything's in order, you're invested. If there's any questions, we may call you. But other than that, you can go back if you like to reinvest at a different amount or reinvest in a future pool at any time. You'll start receiving your statements. Statements come out quarterly. They don't come from us. They come directly from GNS Fund Services, and you will receive your income on a monthly basis. On this pool, the first income distribution will likely be in January, although actually now that I think about it, we're closing November 15th, we believe, and so you will receive income from the day we close, which we expect again to be November 15th. So that first check will either go out in December, or everything for November and December will go out in January. Feel free to take a look at any other sections of the site. Any questions, our phone number is right here, 800-555-1055. Again, my name is George Newberry. You can call me at any time. We hope that you consider investing with us, and we try to make it as easy and convenient as possible for you. But if you choose not to, we certainly understand, and hopefully you'll reconsider in the future. Whichever way you choose, we wish you well with your investments. Again, contact us at any time. Our email and address are here and on the site. And my name is George Newberry. If there's any questions, there is a portion of your screen where you are able to ask those questions. And let me just try to get to that portion. Okay, well, I'm having a little difficulty, but actually I do see a question. It's being handed to me on the other screen. Is when do you expect the pool to close? Okay, November 15th. So November 15th, we are expecting to have all money in by November 14th. That's the goal. It may change by a few days either direction. Another question here, will there be more pools? Yes, there are. We're already working on a pool. We have a pool of loans from a Maryland bank that is we're doing due diligence on right now, so that will close sometime in December. And then we expect there to be another pool every 4 to 6 weeks thereafter. Are there any funds? Are there any fees to participate? No, there's nothing. There's no fee for an investor to register, certainly, and to participate. No, you get, if you have a 9% return or a 12% return, you get the full amount. There's no offsets or fees. Just so you know how American Homeowner Preservation makes our money, we, as I mentioned earlier, we're entitled to any residual value from these pools. So our goal is to efficiently and cost-effectively return your capital with the designated preferred return. In addition, we earn a 2% management fee. So, for instance, on this pool, $5.6 million, 2% is just over $100,000 per year. It's paid monthly by GNS, and it's specified in the documents. That's roughly $8,000 a month. We have about 15 employees, so that's not the big reward or the justification. That comes at the end when all the assets are paid, all the investors are paid off, and whatever assets remain. All right, I think that's it for questions. So we're going to wrap up the webinar. Again, feel free to contact me at any time. My name is George Newberry. I wish you a good afternoon. Thank you.